Come to Remora TC to trade like a shark and not get eaten by one. Let's school together to protect and grow our money. Hi everybody, it is Wednesday, June 25th. Welcome back to my channel. We've got a whole bunch of tickers to review. And if you remember from Sunday, I talked about a global catalyst that took place and how I thought it could really affect the price action. And from what I could see, the results were mixed. For the most part, maybe 2/3 of the tickers that I reviewed behaved as I expected, but there were a couple which did not. So let's review the tickers one by one. Starting off with the SPY, which is the S&P 500. Overall, my annotations remain unchanged. I talked about further low prices for the S&P 500, especially because there's this overhead resistance here. And you can see it's still, this overhead resistance remains in play. You can see here on Monday and Tuesday that the price action has been upward, with lowering volume down here. You can see the volume waning. So really, I think it is really retail investors buying in and attempting to push price further up. But we all know the sell signal came by the sharks. So really, this is not the time from a risk-reward standpoint to go long on the S&P 500. Okay, so annotations remain unchanged, further low prices for the S&P 500. On to triple Qs. Triple Qs reached all-time highs. You can see that here, which you may say negates my prediction. But I wouldn't say that it discounts my thesis. And here's why. The sell signal by the sharks came. Okay, we can't doubt that. The data shows it here. The downward momentum is in play. It's just a matter of when. So right now we're at all-time highs. You can see it's kind of gappy. But the main point is there needs to be a big move made by the sharks, and it's coming. It's not if, it's just a matter of when. So right now, I don't recommend going long, as I've been talking about all along this area here. I mean, once we got this signal here by the sharks to get out, then all of this price action is really highly risky. The reward to the upside is quite low. So my annotations remain unchanged, okay? The overall direction remains downward, as you can see here. That's the triple Qs. On to the gold play, GDX gold miners. The movement for this one is playing out more as I expected. Move this up here, get it out of the way. And here's why. I talked about resistance up here. On Monday, you can see price came up, attempted to reclaim this dashed line that I drew here, which is 53.80 or so. It failed. And then on Tuesday, it actually broke down underneath this trend line and attempted to get above the trend line, only to close the day right at the trend line. Today, it attempted again, okay, 2 attempts to reclaim this trend line. Now, I'm not saying that it won't reclaim it. I'm just saying that the movement is very much a reactionary movement by retail investors buying the dip. So likely, they may attempt to push it back up into this resistance zone here, which I've annotated in the red. This is all overhead resistance. The top edge of this gap fill is resistance. If anything, this might be an opportunity for a short, a good short opportunity. And so I'm going to take a note myself. I might take a short at about, 52.50 or so. I might put an open trade there. open trade 52.50 short. Yeah, take a position there because the downside, the reward is quite a lot. I mean, the first target would be this trend line, and that would take us about, okay, so 10% move down with very little move upward. There isn't much upside, really. So that would be a really beautiful entry, really clean entry. Okay, so that's the GDX play. On to the Bitcoin play. MicroStrategy on Sunday. So here's Friday's candle. On Sunday, I talked about this zone here being overhead resistance. And indeed, and if you watch the video on Sunday, I drew an arrow up here from down here going up into this trend line here as resistance. I removed it because I already made my annotations before this video as I was prepping for this video. But if you watch the video, you see it. So yes, price action Monday, Tuesday, Wednesday, right into resistance. This in fact is a good risk reward short entry along this resistance line up here. So quick mental note here, quick note for myself. Maybe I'll put an order, short order. 394. Yeah, 394.50 or so for a short. Okay. The problem with MicroStrategy and some of the other volatile tickers like Tesla is that there aren't many stocks to short, available stocks to borrow for the short. And if you're, excuse me, if you're not familiar with shorting, you're having to do it with margin. So it's a special setting that you'll have to borrow shares and have collateral. So it's like a loan, and you have to have collateral, and you have to sign, more things. But the main point is, in order to short, you have to borrow shares. And a lot of brokerages, at least one of the main brokerages that I use, that a lot of people use, it's a very popular brokerage firm, they don't have stocks to short, which is really peculiar. They're a major player in the market. So I think there's something going on where they are not wanting to allow other people to benefit for the short trade because this is just how the market works. It's not meant to be a level playing field. Okay, so I personally have two brokerage accounts, two different ones. So if I go to A, brokerage account A, and there are no stocks to short, then I go to brokerage account B and attempt to find it there. Okay, all right, so that I can get into the trade. All right, that's MicroStrategy. Switching to Microsoft. This one did not behave as I expected. Okay, my annotations, full disclosure on Sunday, and actually for the past week or so, was that this this line here, this is the 467 line, would be the main resistance line. Okay, but I did notate, I did acknowledge all of this price action up here. But yet again on, let's see, this is Friday's candle, the red one. Yet again on Sunday, I said lower prices for Microsoft. I think I drew the line like this. Okay, so that's full disclosure. But you can see price has gone up. Now, my reassessment for Microsoft, because I'm not in this trade, is that I extended this trend line so you could see it. It goes all the way up here. And then I put this red annotation here. So I see this playing out, okay? This is how I see it. I see the bearish divergence continuing down here. You can see that, right? So what will happen is price will likely come up and hit this, probably on the gap. They'll gap it up tomorrow. Gap it up tomorrow or Friday. Hit this, and the selling will start, okay? So this may be a nice entry short. So what is this, like, okay, about 500. Yeah, that's a nice even number. that everybody in the market wants Microsoft to achieve. So good for them if they can do it. But then the sharks will sell, sell, sell. Okay. And the selling will take us, first target is the entry here, which coincides with the 200-day. Okay, entry of this gap fill. These are smaller gap fills. They'll come. It's just from a target standpoint, the 200 days is the big one, and then the rest of this gap fill down here. And I extended this up here to kind of show if one were to take a short up here, okay, then your risk reward, that's about a 15% move down here. If you keep going, about 20% for the gap fill. Okay, I'm not an investment advisor. No qualifications or certifications. I'm not, I'm just a Joe Schmo who likes to share his opinion. Okay. All right, so that is the Microsoft analysis. Going to NVDA. NVDA totally did not move as I expected. I talked a lot about this zone being resistance, okay, the red zone here. And I drew it from back here. And I'm leaving it here to acknowledge and to say that despite all this price action above it, my analysis remained unchanged. But what we do see happening, which concerns me from a technical analysis standpoint, that I might have to change my perspective, my analysis, is the growing volume here. So there's growing volume. I mean, not crazy volume. Let's zoom out. Like, this is much higher volume over here. Right? This is 600 million shares. Okay, so these days are tons of shares, 600 million. So the past couple of days at about 150 million, 180 million, 200 million probably today. What is this? Okay, 267. Okay, so it's a little bit more, but it's not 600. Okay. So my question is the question you need to ask me is what's going to happen. So let me annotate this real quick. I'm going to extend this line here. Okay. So let's clean things up a little bit. Let's get rid of this. Okay, let's get rid of this one for now. Yes. And let's focus on this one. Yeah. So I'm going to extend this like that. And I just want to see how this looks if I redraw this real quick. Okay, sometimes we just have to. It's just the way things are. Okay. So I'm pulling this over here. See this? Okay. And all right. So I'm looking at this as, all right, so my resistance point, where I see there's going to be resistance, is in fact actually over here. So let's make this red. Okay. All right. So then, well, what are we going to do? Well, we're going to check to see if bearish divergence appears over here. I circled this here, this RSI move, because it negates all of this, which is kind of crazy. It negates it. So I want us to focus on how momentum moves over the next couple of days for NVIDIA, especially as it comes into this resistance area. They'll probably get it up there. It'll be, higher prices here. And let's pay attention to see if this is bearish divergence here, okay, for the sell. Because, the sharks, yeah, this is peculiar. So no trade really right now for NVIDIA. I wouldn't go long or short. Let's just wait. Okay. Tesla, okay. So the sell signal with the bearish divergence over here. Here's the sell signal, okay, on this candle. On Sunday, I talked about the resistance due to the top edge, this one right here, top edge of the gap fill. Here's Friday. Monday, opened here, quite a momentous move, big move up. And then Tuesday, Wednesday, taking us back underneath this resistance line. So to me, it's a failure to stay above it, okay? Now, I did make this annotation right here because I see this rising wedge. You kind of see this rising wedge here. You can see it better on the hourly. So let's switch to the hourly. Okay, so this is how it looks. Rising wedge up to this line here. And you can see at this zone right here, this spot right there, okay, the RSI momentum on the hourly went down, and then boom, the sell. So this price action for the past few hours of Wednesday, like most of Wednesday, was an attempt to reclaim this trend line here. Okay, to reclaim this one. Here, I'll annotate it a little bit as we talk. It was an attempt to reclaim this number, this one here. But what it's doing is it's coming up and it's going to hit it on the bottom side, which also coincides with this upper edge of the gap fill, which I put in red. So tomorrow, I think what's going to happen is it'll get rejected here, and further low prices will continue for Tesla on the hourly, and it'll lead into the daily easily. Okay, so let's switch to the daily again. There's the daily. Okay, so overall, with all that said, my annotations for Tesla haven't changed. It's lower prices. This is not the time to go long. So about 25% down from where we are today. So what's this? 25, yeah. So the target is anywhere along this purple trend line is where price action will go to. Okay, we don't know exactly where it'll hit. You know, it might hit all the way over here, right? It might hit over here. So it's only a 23% move. But the point is, the support is down here on this trend line here. Right now, this is not the time to go long on Tesla. No matter what they say about the robo-taxis, no matter what they say about, about the company, okay? Just trust in what the sharks are telling one another. They said sell here. All right, let's go to Palantir. Palantir, not big moves, nothing big. You can see that I also drew this resistance line here, and the price action is just above it. It's just kind of hanging out up there. But the momentum remains to the downside. So no change in my analysis. Still further low prices for Palantir. And I updated this, risk reward, this possible, what is the possible trade gain? Well, if you short it, actually, I wouldn't short it here. I would short it below this purple trend line. So if you short Palantir here, that's about a 40% move, okay? But really the first target is the 200-day in this gap fill. So maybe a 30% move, whereas the upside here isn't that great. Okay, so that's Palantir. If you can get an entry underneath here, great for you. I'm in this short, excuse me, because if you followed my videos over the past couple of weeks, I took an entry short. So I'm in the negative right now, right? But I'm not closing the position because my thesis remains unchanged. And because often what you do is the market makers will push price up and down. And if you keep closing your position, then you might not get the right entry because they'll gap the price. And when they gap the price, then your risk reward isn't great. So as long as your thesis, my thesis, at least for the way I trade for myself on my own accounts, is to stay in the trade until something from a momentum standpoint, analysis standpoint changes. Okay, so right now I'm in the negative. That's okay from my own threshold standpoint. That is Palantir. Okay, let's switch to the one long ticker that I shared a couple videos ago. So a week ago today, I talked about going long on Dick's Sporting Goods. And people probably think, who cares about them? They're just a retailer of sporting goods. Well, it's because the setup was right. So down here, lots of bullish divergence. The sharks made their signal to one another here on this day here to go long. And so if you were able to go long, great. Now, you can see the price action, the big rejection right here. See this candle, right? It hit the 200-day. And I made this annotation tonight, right here, this darker black line. So I see, this is what I see playing out. I'm long on this. I think my average entry price was 176. So it wasn't the best entry, but 176, okay? And so right now I'm sitting at about a 5.5% gain up to here today. Great. So this is the gap entry. Here's the gap entry, okay? The gap, upper part of the gap is here at 290, 210 almost. And so here we just entered the gap entry. So the play, I think, what will happen is price will move up and hit this downward trend line, which I annotated with a little red here to show you that that will be resistance. So the question that you might want to ask is, what will I do? Am I going to stay into the trade or get out? Because the thesis overall remains to the upside, there's no change in momentum. Thesis remains to the upside. I'm going to stay in the trade. It's going to bounce around. It may even bounce, let's see, it'll hit here, right? So let's say the next couple of days, it'll take it and it'll hit this resistance zone. Then it'll get rejected. It usually gets rejected for a few days and comes back down. So it'll come back down. It may even hit the bottom side and dip even further below. But then it'll do an impulsive move above it, okay, and break through this resistance line. So my thoughts, just sharing possible trade entries for you, is that anywhere along this green line here, okay, so if you can take an entry on the upper side of this trend line, here's the trend line, on the upper side, closest to it, right? Don't take it far away. You want to be near this trend line. That's an objective long because likely it'll get rejected here. It'll come down. I'm going to stay in the trade because I don't want to have to chase price. Likely they'll gap it above here. It'll be a gap. It may not even come down here, but I'm just saying there's a possibility, and I'm perfectly fine to stick with the trade, long trade, because my overall thesis, as you can see, is the price action continues to go up till it hits this point up here, okay? So now, once it hits that, that's the gap fill, and I'll reassess, but really, I want to get the right entry to get the second move. The second move is all the way to the top of this purple trend line, okay? So we'll have to see. We'll see how it plays here. It may even come back down to this purple line. But ultimately, my ultimate desire is to ride this wave all the way up to this trend line up here, then take my profits. Okay? That is the sporting goods. So not many long trades out there to share. There are a couple out there, but I think the entry isn't at this moment, so I'm not going to share it or in the coming week. But I do see some building bullish divergence out there. Okay, those are the tickers. I hope you enjoyed this video. Please like and subscribe. Give me a thumbs up. Leave a comment. If you want to talk about shorting and what's entailed, or how, what to learn about it, then I might take a moment to do a video. And as always, good luck with your trades, and I'll see you soon.